People aren't struggling to buy homes because they're irresponsible. They're struggling because nobody ever told them the rules of the game. That might sound bold, but stay with me. In America today, millions of people are renting because they assume buying a home requires a mountain of cash up front. Meanwhile, thousands of first-time buyers quietly slip into homeownership every year without touching their savings, without waiting 10 years to save enough, and without jumping through the flaming hoops the internet swears you must jump through. Welcome to Virtual Finance Navigator, where we break down real financial strategies in simple, practical ways, minus the boring jargon and unrealistic expectations. And today's topic, how to get a house with zero down payment in America, is one the banks don't exactly advertise on billboards. Here's the twist. The housing market isn't just expensive, it's misunderstood. There are systems, programs, and pathways built into the American financial structure that make homeownership accessible long before you think you're ready. But most people never hear about them because, well, nobody benefits from you staying uninformed except the landlords. By the time we finish this video, you'll understand why the idea that you must save tens of thousands before buying a home is outdated, incomplete, and in many cases, flat out wrong. If you're ready to challenge everything you've been told about buying a house, kindly like, subscribe, and let's dive in. Number 1. VA loan, the gold standard of zero-down home buying. The VA loan is one of those programs that sounds almost too good to be true until you realize it's been helping Americans buy homes for decades, quietly doing its job while the rest of the country believes the myth that down payments must be enormous. The VA loan exists because the government decided that if you've served the country, the least they can do is help you own a piece of it. And honestly, it's one of the few government decisions everyone agrees was a smart move. Here's what makes the VA loan the heavyweight champion of zero-down options. It requires absolutely nothing up front. Not a penny, not a dollar, not even loose change hiding in your car's cup holder. If you qualify, you can walk into a home purchase with the same confidence as someone who saved for years, even if your savings account currently looks like it's on a diet. And the benefits don't stop there. Unlike most buyers who get stuck paying PMI, private mortgage insurance, also known as the congratulations on your new home, now here's an extra bill fee. VA buyers skip it entirely. That alone can save hundreds of dollars every month. Hundreds. That's not a small win. That's a suddenly I can afford furniture moment. Another major advantage, credit flexibility. While conventional loans stare at your credit score like a strict parent reviewing report cards, VA loans are more like the cool aunt who understands that life happens. Lower scores, short credit history, a past mistake or two, VA loans still give people a fair shot, as long as they're financially stable now. On top of that, interest rates are usually lower. Why? Because the Department of Veterans Affairs backs the loan, reducing risk for lenders. Less risk equals better rates. Better rates equals lower monthly payments. Lower payments equals you keeping more money for things you actually enjoy. The only requirement, eligibility. This loan is reserved for veterans, active duty service members, National Guard members, reservists, and certain surviving spouses. If that's you, congratulations, you have access to the most powerful home buying tool in America. The VA loan isn't just a benefit, it's a game changer. It turns renters into homeowners without requiring the usual financial gymnastics. Number 2, USDA loan, zero down for non-city buyers. The USDA loan is the quiet hero of zero-down mortgages, the one most people overlook because they assume it's only for farmers buying barns, tractors, and wide stretches of land. But the USDA loan is actually for regular homes in regular neighborhoods, as long as they're not inside a major city core. And here's the twist. That applies to 97% of the United States. Yes, 97%. You might already be living in a USDA-eligible area without realizing it. The USDA loan offers a real 0% down payment path, no tricks, no gimmicks, no minimum contribution fine print. If the property qualifies and your income fits the guidelines, you walk in with no down payment required. It's like getting a VIP pass into home ownership while everyone else is still saving pennies in jars labeled someday. Another perk: USDA loans come with incredibly low mortgage insurance compared to FHA loans. Translation: smaller monthly payments, add competitive interest rates, flexible credit requirements, and a system designed to help families build stable financial futures, and you have a loan worth taking seriously. USDA loan buyers often get more house for less money because eligible areas include spacious suburbs, quiet towns, and growing communities where property prices haven't yet exploded like they have in major metros. This program is ideal for first-time buyers, families seeking quieter neighborhoods, remote workers, or anyone sick of paying premium prices to live in noisy, cramped cities. If you've ever dreamed of owning a home with a yard, a garage, or simply peace and quiet, the USDA loan might be your best friend. Number 3. Down Payment Assistance, DPA. Free money or almost free. Down Payment Assistance Programs, or DPAS, are the financial equivalent of finding out your favorite restaurant secretly gives out free appetizers. You just needed to know to ask. Across America, state housing agencies offer grants, forgivable loans, and low-interest loans designed to help buyers cover down payments and closing costs. And here's the wild part: most people qualify without even realizing it. DPAS come in several flavors. Grants are everyone's favorite because they never need to be repaid. Forgivable loans disappear after a few years of living in the home. They're basically loans that don't want to be loans. Then there are zero-interest loans that give you extra time to repay, and standard DPA loans that fit neatly into your mortgage package. Who qualifies? Often, first-time buyers, teachers, healthcare workers, anyone with moderate income, residents of certain neighborhoods, buyers attending approved homeownership classes. The biggest challenge with DPA isn't qualifying, it's simply knowing these programs exist. Some offer $5,000, others offer $20,000 or more. Many can cover your entire down payment and part of your closing costs. DPA turns "I don't have enough saved" into "Wait, I actually qualify?" When paired with the right mortgage program, DPA becomes a powerful stepping stone into home ownership. Number 4. FHA plus DPA. Combo: turn 3.5% into zero. FHA loans are already famous for helping buyers with lower credit scores or smaller savings amounts. But when you combine an FHA loan with down payment assistance, you essentially create a secret zero-down pathway that most people never hear about. An FHA loan typically requires a 3.5% down payment. For a $300,000 home, that's $10,500, enough to make many potential buyers slowly back away from Zillow and return to their rental agreements in defeat. But enter DPA, stage left. Grants and assistance programs can cover that entire amount. It's like ordering something expensive online and someone else mysteriously paying your cart total. The FHA plus DPA combo is perfect for buyers who have stable income but lack big savings. FHA loans are more forgiving, with credit scores in the 580s are often acceptable. You also get predictable interest rates, flexible guidelines, and lower barriers to entry than conventional loans. Add DPA on top of that, and suddenly the upfront cost becomes $0 down payment required. This approach is one of the most realistic zero-down strategies for the average American because it works in every state and doesn't require military service or rural living. For many first-time homeowners, FHA plus DPA is the moment they realize the dream is actually affordable. Number 5. First-time homebuyer programs, banks competing for you. Banks love first-time buyers more than gyms love January memberships. Why? Because first-time buyers represent long-term financial relationships. That's why so many banks now offer special programs to make buying a home easier, often with zero or very low upfront costs. These programs vary, but many include reduced or waived down payments, closing cost credits, lower interest rates, grants for buyers in specific communities, programs with no mortgage insurance, better terms for moderate income borrowers. Major lenders like Bank of America, Chase, Wells Fargo, and credit unions across the country offer these incentives to attract new customers. Some programs even provide $5,000 to $15,000 grants depending on location. These aren't charity, they're competitive offers. As more banks invent programs to lure customers, buyers benefit from the price war. If you're a first-time buyer, you have more leverage than you think. Banks want your business, and they're willing to make homeownership easier to earn it. Number 6. Builder incentives, new homes with no upfront cost. Home builders don't like unsold homes, empty houses cost them money, and when builders want to boost sales, they don't just lower prices, they get creative. Enter builder incentives. Builders often offer to pay your closing costs, buy down your interest rate, or even contribute toward your down payment. Some builders will cover all of the buyer's upfront expenses if you use their preferred lender. Why? Because moving inventory quickly keeps their business strong. It's cheaper for them to offer you a few $1,000s in incentives than hold an unsold property for several months. The best part? You get a brand new home, no repairs, no outdated wiring, no mysterious stains on the carpet from 1998. Everything is modern, energy efficient, and under warranty. New construction paired with incentives can reduce your upfront costs to nearly zero and shave hundreds off your monthly payment. Number 7. Seller credits, negotiating your way to zero. Seller credits are proof that sometimes all you have to do is ask. When a seller is motivated, maybe the home has been sitting a while or they're relocating. They may be willing to cover part or all of your closing costs. These credits can reduce your upfront expenses significantly. FHA, VA, and USDA all allow seller contributions up to certain limits. Combine those with lender credits or DPA, and you can walk into closing without spending much, sometimes nothing at all. Seller credits are especially powerful in slower markets, winter seasons, or when buyers have leverage. It's one of the most underrated tools in the zero-down toolkit. Number 8. Rent-to-own programs, a stepping stone to ownership. Rent-to-own programs offer a practical path to homeownership for people who need more time to save, fix credit, or prepare financially. Companies like Divvy, Home Partners, and others buy the home for you, then allow you to rent it while building credits toward a future purchase. Part of your rent goes into a special fund applied to your eventual down payment. Think of it as forced savings with a purpose. You live in the home now, and when you're ready, you buy it. It's not truly zero down, but it eliminates the need for a large upfront payment and bridges the gap between renting and owning. It's a stepping stone, but a good one. Thank you for watching this full breakdown of how everyday Americans can become homeowners without massive upfront savings. Today, we explored VA loans, USDA loans, down payment assistance programs, FHA combinations, first-time buyer incentives, builder deals, seller credits, and rent-to-own options. All realistic paths toward owning a home sooner than most people think. Homeownership isn't just for the wealthy or the lucky, it's for anyone willing to learn the system. If you found this video valuable, kindly like, subscribe, hit the notification bell, and share it with someone dreaming of owning a home. And tell me in the comments, which program are you most interested in exploring?